All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. I'm happy to be here. Hopefully you are too. It's the halfway point. Mr. Tony St. James, love that name. He handed off the baton to me now, so it's the second half. And here we go. Let's see how things are shaping up, right? The last time I checked, we'll go to corn first, but corn was a little lower and it still is. March down 1 3/4 cents to 456 1/4. And that's close to the bottom of the range here. So we're 3 ticks away from the bottom of the range. I don't like that. Now we're a penny off it, so we just ticked up. We're a penny and 3/4 lower in the May to 464 even. That's three ticks off the low there. We've had about a 3.5 cent range, so not a lot going on, but we are just a little bit easier. I'm going to call that board steady, a little bit easier. We're 1 1/4 to 1 3/4 cents lower across the board in corn. Let's move to beans. This is a little tighter, really kind of close to unchanged. Jan's down 3 ticks, 3/4 cent to 991.5, but that's 2.5 cents off the low of the day, 2.5 cents off the high. So really not very much going on. That's beans. That's Jan. Wow. We're a 1/4 cent better in the March, 997.5 last. We did have a 10:01 print, so that's the high. But we're about 5.5 cents off the lows there. May's up. May's now sharply unchanged at 10:07 3/4. You know, we're closed tomorrow, so I'm trying to make something out of nothing here. I'm going to stop doing that. Just let it be. Nothing going on in beans. Chicago wheat's down about 5.5 cents across the board. March is down 5 3/4 cents to 536 3/4, which is a penny and a quarter off the low of the day there. And we've had a 9 1/4 cent range. May's down 6 cents to 548.5. That's wheat in Chicago. Down around about 5.5 to 6 cents across the board. That's Chicago wheat. Let's go to hard red wheat in Kansas City. A nickel lower in March, 5.50 3/4 is last there. And that's about 2 1/4 cents off the lows. May's down 4 3/4 cents to 559 3/4. So all these wheat products look to be around about a nickel off across the board here so far. This is the hard red in Kansas City. Let's move along and see what we've got going on in the spring wheat. Spring wheat in Minneapolis, that's going to be a little bit more than a nickel lower. 7 3/4 cents lower in March to 587 even. And that's 3 ticks off the low of the day and about 9 cents off the highs. We got a May board down 7 cents to 595 3/4. So that's spring wheat off anywhere between 5 1/4 to 7 3/4 cents across the board there. We'll check in on cotton and we'll get to our next guest analyst. What do we got going on? Well, we got cotton down 6 points. 68.45 is last in the March. 68.45 down 6 points, and that's been real quiet the last few days. Not a lot going on. All right, let's bring him in. Peter Haralambakis. He's with CHS. I think he's in Timber Grove Heights. There he is. Yeah. Look at that beautiful office they've given you there. You must be a big shot.
Yeah, corner office window.
All right.
Now,
what do you got for us? What's going on?
Well, we could talk energy today, right? We did see and hear yesterday our first drill, baby drill. However, when we're seeing refined products build 6 million, when we're looking for estimates of only build of 500,000 in the distillates and build 6.3 million gasoline stocks, and we're looking for a build of only 1 million there. Crude drew 1 million there. We're looking for unchanged stocks as well. The drill, baby drill is going to be tough to get across the goal line to get these energy prices, even lower than they are. If we're looking at crude pushing stocks at 10-year lows, crude oil trading at $73 overall. The refined margins in the form of an RBOB looks to be 34% off its highs that we made right before the holidays there. So any instance that refiners can increase capacity is going to be very challenging to the tune of lowering prices overall on the energy side. But that be something on the horizon that we're watching along the lines of refined products. If demand is lower, it's going to be real tough to kind of flush the market with excess product and get prices lower there, Scott.
Yeah, and we're watching it acutely. It's a big word for me, but it's because it's also inflationary when we start to see this. We've had a shortage, I think. I mean, at least the oil guys will tell me the market's not reacting to it, but we have had a shortage here for a while, and or at least it's been tight. And if we see this thing get up 75, 77, maybe $80, that could be a problem, couldn't it?
Yeah, I mean, OPEC's going to do everything they can to try to keep everything status quo or balanced, right? But if we have our majors rolling out in their earnings calls, we're losing X amount of percentage to the tune of 20 to 30%. They're certainly not going to turn around and say, hey, yeah, we'll produce more, we'll roll out more. oh, by the way, that's going to hit our refining margins, right? So it's going to be very challenging for that dynamic to play out. So I think that's where we sit right now, as we have all these majors come out and say that their margins overall and their net profits are lower because of demand, because of refining margins. We'll see. Historically, this time of the year, we do see some basis levels that touch some bottoms in regard to HO. We'll see if that kind of plays through in Q1 as of right now.
Real quick, I haven't heard anybody talk about it, but are we ever going to replenish the petroleum reserve?
I think I will punt on that topic every time because, again, we have and produce so much oil, right? I don't think we're in a situation where we're ever going to have a short supply of production. So yeah, there could be the pundits out there that are leaning towards price volatility surrounding the SPR, but in the grand scheme of things, it won't necessarily be that big of a deal when we're talking crude oil prices.
Well, that was better than a punt. That we actually, you had a first down with that one. That was good stuff. Appreciate you coming on. Thank you very much, Peter. Peter Haralambakis, he's with CHS up in Inver Grove Heights. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with a guy in a livestock jacket right after this.